I've been able to look at Nigeria over the years and its growth, and I think the main important thing in the Nigerian economy is that you've been through a couple of tough years because of the adjustment in commodity prices. But I had a chance to meet your government and your vice president yesterday, and I felt that they are seized of the need to diversify the economy away from an over-reliance on one item. And I believe that once the system and clients and people who I met last night also felt the same way. When enough people feel that way, our employees, clients, and government, it feels like at some period of time, this will lead to the right conclusions in terms of diversifying the economy away from an over-reliance on one commodity. But that's not the only reason I'm here. I'm here because I believe the opportunity for companies like ours to be a helpful partner in Nigeria are enormous. And what do I mean by that? 90+% of the retail transactions in this country between you as a consumer buying something at a merchant are still in cash. And cash is not cheap. People think cash is free. Actually, cash is not free. The cost of cash is hidden, but it's very real. Studies done around the world estimate that it costs an economy somewhere between 0.5 to 2% of GDP to produce, print, secure, and distribute this cash. And then what does not included in that is the fact that without electronic forms of payment, tax collection and revenue collection for a government becomes complicated. And when you're a country like Nigeria where you want to help the population, the government needs revenue to be helped at. And then the third part of this whole thing is that cross-border illegal activity, which Nigeria does suffer from. You've got complications in your neighborhood. That's very difficult to enable without cash. After all, illegal activity doesn't happen mostly with a bank transfer. It tends to happen out of cash because cash is anonymous and fungible. Now, I don't mean cash should go to zero. I think cash plays a real role in protecting people's privacy and in being helpful. But I think this ratio of 90+% is a bad ratio. So to me, as a company in the electronic payments business with technology and data as the core of our work, I see an enormous opportunity to be helpful both to transforming Nigeria more and more into cashless Nigeria, but also enabling our company to grow in that process and continue to invest here. When I first came here some years ago, we literally had very few employees on the ground. I just came out of speaking to my employees, and if you'd met them, the pride, the passion, the energy, the interest in their faces, that itself is worth the trip. Just seeing their energy and commitment to what we can do in Nigeria with transforming the economy. So what I'm trying to say here is that, everybody says you want to do well and do good at the same time. I actually think we can. We can do well. We can grow our business by converting the ratio of cash in the retail economy. But we can also do good by helping the government reduce the inefficiency, reduce the leakages, reduce the cost of the economy, and enable that money to be diverted back into the big picture of where Nigeria could go.
What's your assessment of what the banking sector regulators has done in Nigeria around cashless policy and electronic payments?
Now, yesterday, as part of that respectful way, we went and met the vice president. And I had a terrific conversation with him and his team. And really what we discussed there connects directly back to your question. What we were really discussing is how do we improve the circumstances around financial inclusion in Nigeria? Because if you improve that, and you get more people into the financial system, that leads to more people using electronic payments. That has a direct connection to GDP growth. Now, what do I mean by that? The estimates are that around 40% of Nigerians do not have access to any form of financial services in a formal way. Now, if you take that number and you say that 1% increase in electronic payments, and this is a Moody's study, can generate up to 0.4% increase in GDP. So that's really interesting as a number. So if you can generate a terrific amount of increase in GDP from electronic payments, then what you can do is to help by bringing people into financial inclusion, reduce their dependence on cash, and improve the economy. How does that actually happen? These are numbers, but how does it actually happen? Take a merchant, a small merchant. Nigeria has many SMEs. SMEs are a large part of the Nigerian economy. But if they're operating in cash, they don't have access to credit, because which bank will give you a loan if they don't know what your business dynamic is? Then they have to give you a loan because of you as a person as compared to the very successful merchant business you may have built. But if your transactions were electronic, both the revenue from your consumers, but also your purchasing from companies as your expense, and you went with that trail to a bank and you said, sir, you can see I do, 2,000 nairas a day of this and $1,000 of this purchases, a bank will be able to underwrite you for credit or insurance in a much more tangible way than they would otherwise. I've just seen this operating. I was coming from Johannesburg in South Africa. We went to see a small merchant, truly a small merchant, through a very simple technology of QR codes that reduces the cost of electronic acceptance at a merchant shop to almost zero. The terminal cost, there's no terminal. It's a flat piece of paper or a QR code generated on a phone. He was able to sell me a bottle of water and get the credit into his account instantly. And what was interesting was his face. So when he got the money in his account, his face lit up because it was proof of his business. And he showed me the whole trail of the business he had been doing with QR codes. And then he showed me the purchases he was making from large companies who were supplying him product through QR codes. And he said, now I can go to a bank and I can show them who I am. To me, that's the real issue behind the numbers. That's the dignity that you give the SME. And that's the ability you give them to grow their business. If he grows, he will hire somebody to work there, and that creates a job. And life is all about jobs and quality of life. Everything else doesn't matter. So to me, that's the power of electronic payments. And that is what your government here was discussing yesterday, financial inclusion, and how to reach the poorest of the poor and the smallest business and get them into the financial mainstream.
As part of your conversation with the Vice President recently, smart cities came up. What are your plans for smart cities in Nigeria? What areas are you looking at collaborating with the Nigerian government to ensure the delivery of smart cities going forward?
For me, the blessing of urbanization only works if you give quality of life and economic opportunity to your citizens. So economic resiliency, but also inclusion is really important if urbanization is to deliver the promise to our citizens in every country. Now, I grew up in India. India has many of the same challenges as in Nigeria. Large population, urbanizing very rapidly, urban infrastructure is decaying, and a need for urgent investment. And it's not easy to get these things done. So the challenge here is, should you invest the way of the last 50 years, or should you rethink the investment model for these cities and make them smart cities, where the meaning of smart is you use technology and you use open, global, interoperable methods to create low-cost, efficient ways of giving your citizens access to networks where they live and work. Transit networks, health networks, networks for opening a new company and a new business. Your country is blessed with being a large incubator for fintechs, one of the best. That's because young people here are educated and ambitious. Well, they need networks to succeed in. They need a place to connect to companies like mine. They need a place to connect to people who will give them capital. They need a place to connect to technology writers. All that requires networks. Smart cities can create that if they create open, interoperable systems of doing that. And I could give you many examples of how I've seen this in different cities around the world as we go through this conversation.
Now, in all of this, one of the concerns that comes to mind is the issue of security and the privacy of the end users. What are your thoughts on this?
My view is that privacy and security are really important because trust is very important as a part of a smart city. And trust gets lost by privacy and security getting violated. So to me, the kinds of things you have to do in security and privacy is to invest in the technology that will enable citizens to feel that their data will be safe. And that is going to be a continuous effort because the Internet of Things is going to connect almost every device in the world. People are talking about 50 billion connected devices in the next 15 years. Cameras, watches, glasses, thermostats, electrical systems, refrigerators, toasters will all be connected to the Internet. So I think having the right security protocols, but also using artificial intelligence to create the ability to see anomalous patterns of behavior between data so you can stop it and prevent it is really important. We're actually invested enormously in that space. And I will give you an example which will interest you. We bought a company called New Data recently. And what that does is it looks at the way you use your phone. It looks at the way you use your phone, how you interact with it, how you type, how many mistakes you make, whether you use it with two hands or one hand, and it can say, this may not be Ajay Banga using his phone. Looks like somebody else is using it, and it can give a risk-weighted score to the merchant or the bank who is approving something that is being generated from that phone to say, you need to know this may not be the correct guy. Now the bank may choose or the merchant may choose to still approve the transaction because they think it's the risk-reward equation. But we put them in the power of making that decision. That to me is the future of security and privacy. You provide the tools and the techniques for the decision makers to be able to make a good decision, an informed decision about what they're dealing with. Really important.